That's our listener poll for this week. Would you rather come to Utah and spend a week in Park City and ski with Jason and check out our HQ? Or would you rather, what was the other one? Go to Lagoon?
Disneyland.
Oh, Disneyland.
Lagoon.
That's right. Yeah, my bad. Would you rather go to Disneyland?
Freeze at Lagoon or ski on the mountains?
Let's ski. Let's definitely ski.
Oh, yeah.
Park City. Skiing. It's pretty up there. All right. Welcome to episode 34 of the HIG podcast, everyone. The big 3, 4. I am MattyP, and I'm here with the host of this podcast, your friend, Bronson Kaufusi. What's up, Bronson?
Hey, everybody. It's good to be here.
It's always great to have you here back home in Provo, and specifically the Harris Financial Center, which is where we're broadcasting from today. And we are absolutely thrilled to have our favorite guest on the show, probably your favorite guest as well. I can tell you it's the most listened to episodes that we ever produce. Little side note, we have Jason Harris with us today.
I asked them to say that. I pay them to say that. Good job. You did great. You delivered.
Cha-ching, cha-ching.
Yeah.
The man with the name on the building.
This is true.
No, episode 34. We made it. What basketball player was number 34? You might know this.
What basketball player is number 34? Shaquille O'Neal.
Oh, there you go. I never doubted it. Bronson is a memorizing machine with numbers. I don't know if anybody knew that.
Especially athletes.
Yeah, well, funny little story. I've told it a million times. I left my keys in my golf bag when we were in Mexico. Didn't realize it for about 10 hours. And when I did, I frantically started to run back to the golf course and then realized it was much too far to run. So I hopped in the golf cart, got there, and opened up where they keep all the golf bags, and I could not remember what my number was, and there were hundreds. There were so many. And I remember thinking, there's no way. I may as well just get, new car key, new driver's license. And then Bronson called me, and he's like, yo, bro, your bag number is 54. Or 52, I can't remember. You probably still know. But anyway, I was like, really? No, are you sure? Sure enough.
No way.
Out of hundreds, there were probably I don't know, I want to say 1,000, but maybe 300. It felt a lot bigger than what was actually there. But the whole point of the story is Bronson remembered. A man of numbers.
They don't lie, guys.
That's right.
Just like Jason knows.
Yeah, Jason knows numbers for sure.
Numbers don't lie.
All right, Jason. Well, we're doing this fun thing before we really get into the meat of our podcast episodes. We have 5 questions we've been asking our guests just to help all of our listeners get to know you a little bit better. 5 different categories. You respond with what your favorite is in each, or what comes to your mind first. And let's have some fun with it. So the first one is, what is your dream car?
I have, since I was a kid, wanted to have a Ferrari. And actually, so many times when we stay at the Grand America, there's a Ferrari dealership over there. And I will stop in every time and I check out the fleet. And someday I'm going to pull the trigger. I'm going to get a Ferrari. I'll probably just do the Portofino. I love all the different cars. That's just their base model. That is, to me, the dream car. Someday I'm going to pull the trigger.
That's awesome. All right, good answer. Next, what's your favorite snack or your go-to snack?
Popcorn.
Oh.
Orville Redenbacher's Naturals popcorn.
Like just the butter and salt?
I wish that I could stop. I take a handful and then I take a few more handfuls. But yeah, no, definitely my kids know that for sure. It's popcorn.
Would you still eat kettle corn?
I don't discriminate, Bronson, but I do have my particular versions I like most, but I
know what to get you
popcorn.
now. Yep. I know what to do.
All right, third, what is your favorite travel destination?
Carrie and we have been so blessed to travel a lot. Her and I didn't travel a lot growing up, but once we got married, I worked at Edward Jones starting out my career, and they had incentive trips, and it allowed you to go, if you hit your sales incentive, that you got to go choose a destination. And so Australia was our first place, and we've gone to a lot of cool places. So trying to remember now where we stayed. Brisbane?
Oh yeah, Brisbane. Yeah.
And so we stayed there, and then we got to see the Great Barrier Reef.
Oh, cool.
I was blown away, the beauty underneath the water. I mean, I couldn't believe. I wish I had been scuba certified at the time, but we snorkeled. It was just amazing. But going into that, I've got to see a lot of beautiful places. But Carrie and I just got back from Lake Como, Italy, and I cannot believe how beautiful it was. I told Carrie, like, we have to come back. Everywhere in Italy is awesome. The Amalfi Coast. We love Rome and all the historical sites you can see there, but Lake Como, I'm going to say I want to go back. I love the food. Italian food's awesome, but the ambiance, I'm not really a romantic, but man, that is a romantic place. Yeah. I loved it. Just the ambiance was awesome. The food was good. Gelato a couple times a day. So, yeah, Lake Como.
I saw some pictures. It looked amazing.
Oh, it's so amazing.
Yeah.
We got to take a boat out on the lake, and you don't even have to have a license. You just pay someone. They let you take out the boat. And so we hit up all these different cool places, just driving around on the boat, just her and I. It was so fun. Stopped at a nice restaurant and enjoyed it, and hopped back on the boat and just kept going around and saw a lot of cool places.
That's cool.
Yeah, that was fun.
That's so cool.
Yeah.
So cool. All right, next, who's your biggest motivator, or what is your biggest motivator or mentor? Who's your mentor?
You know, I don't know if this is the angle that we're looking at, but there are people who I certainly look up to and people who I feel like have lived a life that I want to try to emulate, but I'd have to just say the Savior. I mean, Jesus Christ is the ultimate mentor and King of Kings, and so he's the example I want to live by, and so I'm gonna go with Jesus Christ.
Good answer.
Matt did. Matt gave the same answer.
That's why we put him next to the temple over there, just to keep him on the right track. So.
All right, last question. What is a favorite maxim you can share? Maxim being like a one-liner, a phrase, a paragraph, a concept. Do or do not. There is no try.
So growing up, my mom always said, if you think you can, you can. And that was always in my mind something that she instilled in all of us kids, that if you put your mind to it, anything's possible. But later in life, something that kind of ties to it that I just absolutely resonated with me at my core was Marianne Williamson's A Return to Love. There's a quote there that she said, "It's our light, not our darkness, that most frightens us. We ask ourselves, who am I to be brilliant, gorgeous, talented, fabulous? Actually, who are you not to be? You are a child of God. Your playing small does not serve the world. There's nothing enlightened about shrinking so that other people won't feel insecure around you. We are all meant to shine, as children do. We were born to make manifest the glory of God that is within us. It's not just in some of us, it's in everyone. And as we let our own light shine, we unconsciously give other people permission to do the same. As we are liberated from our own fear, our presence automatically liberates others." And I've loved that quote. I have it in my office. I try to read it regularly. And I just feel like all of us have infinite potential. We're all talented and gifted and have the potential, to help and rise those around us. And I love that because it just inspires me to try to be the best man, the best version of myself, and not try to compare to others, but compare to my old version and try to evolve into a better version of me. And I just love, that quote. So that's what I'm going with.
That's awesome. That's deep. I like that.
That is strong.
Yeah.
That is a strong one right there.
It's a great book. Yeah.
Say the book again.
A Return to Love.
Okay.
I don't know if we'll ever have one that tops that. So that probably concludes this segment early on, and it's showcasing. It's always fun asking people questions that, we don't normally get to ask. It shows a different side to them, I think, which is kind of fun. And then you can see, like, based off of who the person is, you can kind of glean, like, oh, maybe that's where that originated, right? Like, oh, I can see why that would be important to him because that's literally what he does.
Yeah.
So,
it's true.
Thank
Very
you.
True.
All right, well, we have something really fun to talk about today. We've been asked a whole lot lately about the new tax legislation, specifically how that's going to affect our investors or how that's going to affect high earners. We work with a lot of them. It seems like every day we get introduced to more, And these high earners have very specific questions about their tax liability or their tax burden and what their options are. And Jason, you are the most well-versed person that I know to speak to them or to speak to this. And so that's what we're going to talk about today. Now, Bronson, maybe you can help kind of level the playing field. When we say high earners, what do we mean?
There's all types of high earners, but they vary, right? I know one that we often use in different use cases. We'll take, for example, like an orthodontist, right? They're running their business, they're earning, they're high earners, and a lot of orthodontists build their business to sell it. So maybe we could use them as an example and maybe walk through the different scenarios with the current legislation and then also what we specialize in, which is, gas stations and truck stops. So Jason, maybe you could touch on that. Let's first go, if I, as an orthodontist or doctor, whatever you are, right? We'll just say orthodontist for now. I'm making $1 million a year. How can what Harris Investment Group specializes in, how can that help me? What should I know about?
That is a loaded question. There is a lot to go into that. Now, $1 million obviously is a very high income earner, but there's different types of $1 million earners.
It's true.
You come from the NFL, Bronson, you saw a lot of people making a W-2 $1 million plus annually and other bonuses. That's going to be taxed differently than, an orthodontist, dentist, chiropractor, doctor type, business owner perhaps. That flexibility allows you to set up an S corp, pay yourself a W-2 wage, write everything else off as business income to reduce self-employment tax. So there's so much to that. But if you want to use an example of an orthodontist, you go into the business and you're able to set up an LLC, file it as an S corp, pay yourself a reasonable wage. Mm-hmm. That way you can reduce your self-employment tax. Everything else is considered business income. But regardless, you're still going to be hit with the federal and state taxes on top of the FICA and Medicare. That puts you in the 40-50% range of what you're giving to the government between those different methods or the different taxes. And then there's going to be sales tax and other types of taxes that you're paying to build your business and equipment and the like. And so I guess if we want to go down the angle of what the tax bill now is offering anyone, but business owners that, are using the tax code to try to reduce their tax liability. And I guess this is something I do. I'm looking at mine. I'm strategizing right now as I've gone through my 2024s, filed an extension, have several K1s, have several S Corps even. Typically you only have one. I have two in my case, and then several other, Schedule C's, Schedule E's, Schedule D's. So it's complicated, it's complex. Mm-hmm. However, I think the goal is to reduce your tax liability legally so that you can keep more of your hard-earned money, and of what you keep, make it work hard for you.
Yeah.
And so early in my career, fortunately, when I was a financial advisor, I had a family office relationship who was developing student housing projects, selling them, creating a capital gain, and using truck stops as a tax shelter to not pay the capital gains tax on their development project. And I was blown away by that and quite frankly kind of dumbfounded, not thinking like, how in the world can you do that? You can't make $21 million and not pay taxes. Yeah. And so I just wanted to understand it. And, I asked a lot of questions and learned that there are some amazing tax shelter benefits for those that help the government solve problems that the government has in our country. And affordable housing and energy are two things that the government cares a lot about. And so there's great tax shelter incentives for those that are willing to invest money and capital towards those causes. And so truck stops benefit uniquely if 50% of the revenue or more comes from the pump. Anything from the purchase of a truck stop can be depreciated in the first year. So it's called bonus depreciation. And in the tax bill of 2025, it bring back 100% bonus depreciation on a truck stop. So if I give an example, a $10 million truck stop, for example, comprises of two components, land and building. And the building value, because these truck stops often are in rural areas, comprises of 95% plus sometimes of the full purchase price. Yeah. So let's just use the example of $9 million. That's conservative. Well, you buy a $10 million truck stop, you get a $9 million write-off, but not often are you putting cash up for the full amount.
Yeah.
You'll finance it through the bank. And so at Harris Investment Group, we may put up $4 million of equity. That'll cover the down payment, closing costs, and some cash reserves. But the bank will finance the remaining amount.
Yeah.
And so we're getting a $9 million write-off for a $4 million equity injection.
Yeah, that's
that ends up being a 225% depreciation loss benefit per dollar invested. So $4 million gets a $9 million write-off. That's $1 million. We get a $2.25 million write-off. And so what high-income earners can do, they can invest in a truck stop, and let's say it's $1 million that they were able to invest. They could generate a $2.25 million write-off, and then that write-off can now become a tax shelter to offset income on their tax return. Now, there is a little caveat. In essence, Harris Investment Group takes on the responsibility of identifying a good investment opportunity via a truck stop. But in purchasing it, the tax benefits through a cost segregation study is a pass-through loss in a K-1 to the investor or to us. We invest in all of our deals as well. And that loss can then help other areas of your tax return, including sometimes your business income, that $1 million that you're making. Or you sell the practice and come into a large windfall. That's a capital gains event.
Yeah.
That depreciation, again, from the truck stop can sometimes offset the capital gain of the sale of the practice and even the full amount. We had someone after the tax bill passed who invested an 8-figure sum because he sold his insurance company and wanted to shelter the full amount from being taxable, $37 million.
Wow.
And so it's a very, very amazing tax shelter strategy because you're generating a phantom loss.
Not real.
That's not real, and utilizing that loss as an offset to a capital gain when selling a business or selling a practice.
Yeah.
And so in order for you to be able to utilize the loss against business income or capital gains, you have to classify that loss as a non-passive loss or active loss. Normally, depreciation on truck stops or any real estate investment, multifamily, could be your practice, you buy your building that you're operating your business in, for example, you could get a depreciation loss benefit from that.
Yeah.
So it's no different. It's just truck stops get all of it written off in the first year, and that makes it a lot more, a lot faster and all up front in this new tax bill. And so with that, in order to be able to utilize it against active income, so W-2, capital gains, portfolio income, you need that loss to then be a active loss or non-passive loss. So to do that, you or your spouse, if you're married, can be active in the activity of real estate. And it's a designation that you check off on your tax form that says, I'm active in my real estate investing. And that alone will change the loss from being passive to non-passive, allowing you to shelter it. So there is ways to qualify so that if you're checking it off, you've got to meet the criteria.
Yeah.
But as long as it's your primary activity, so you or your spouse, it's primary activity, and you spend 750 hours in that year towards that activity, you can utilize that loss as an active loss or a non-passive loss. And so it's incredible how I've seen people buy a single-family home, a rental property, an Airbnb, whatever it may be, and that individual or their spouse takes on the lion's share of financing it, identifying it, renovating it,
all
managing
material
it,
participation,
doing the accounting of it, whatever it may be. There's different ways. They get their license. That's hours that you can use towards the accreditation. And so all of those things can help towards those hours.
Yeah.
And so if you have passive investments like the truck stops when investing with Harris Investment Group, along with something that you're active in, you don't have to have 750 hours per property.
Yeah.
Or in all of the properties, you could literally have all of their time spent on one, but you group your properties in the grouping election.
Yeah.
So that allows you to take all the losses from every position or every property against the tax return, against the capital gains or your strong W-2. And so that's the beauty when it becomes very, very powerful.
Wow, that's awesome. I think one question, because I'm going back to the orthodontist piece, they're owning their business, they're running their practice, and what if the orthodontist owns the building, the commercial property, and they're the ones managing the other units and everything, or maybe their spouse manages it for them?
Even better,
right?
Yeah.
Would that count?
All the hours that the spouse is spending, yes,
to
on
claim
that.
the real estate professional designation.
Yes, it certainly can count towards it.
Okay.
Now, they still have to meet the criteria, 750 hours.
Yeah.
But if they spent 300 hours throughout the year in activities that were relating to their office, yes, it counts. And so you just document that as a part of the process and discuss it with your CPA or tax professional. It's the CPA that ultimately will, want to feel comfortable with moving forward with it. And so you want to discuss that strategy and plan with your CPA. We have those conversations regularly all the time, discussing how can we help this individual utilize rep status so that they can qualify and use this loss against the sale of their practice or company or whatever the income may be coming from, right? And so, as you know, Bronson, we've helped a lot of professional athletes who have W-2 income. W-2 income earners hardly have any write-off capabilities. And when you're making your money in different states, you've got state taxes from all these different states based on where you played the game. And so that becomes a very valuable tax shelter opportunity using truck stop and rep status. And so, it's more about understanding your wealth strategy and tax strategy. Yeah. If you're a younger orthodontist and growing in real estate, you want to be a part of your allocation to your net worth. And obviously that we would be a good fit most likely for someone like that. If you're an older, orthodontist that has some more experience, you're probably making more money and are needing more tax shelter. And so truck stops can be great cash flowing assets so that can provide passive income, but it also provides a meaningful tax shelter loss. And so one thing too, I guess I'll mention that I'm really excited about is next year's Opportunity Zone 2.0. Most of our truck stops are located in areas that are approved for an opportunity zone.
It's like a double whammy, right?
Yeah, and so you sell your practice, it's a capital gain, you put the capital gain in the OZ fund, and the OZ fund then invests in truck stop. You now get bonus depreciation loss benefits and the capital gains tax treatment deferral, which is incredible. And then you can use the depreciation later to shelter the capital gain that you deferred. Yeah. And so it's just a phenomenal tax strategy. And we have people all the time who's like, that's too good to be true. And I thought the same when I was in the business.
Now you live this. You've
as a financial advisor. Yeah, I've been using this for 12, 13 years now and have paid little to no taxes, not every year, but most of the years I've paid very little in taxes compared to my income. And it's because I'm generating loss from real estate investments and phantom loss, depreciation loss that I can then utilize to help offset, my business income and W-2 and capital gains.
Yeah, and I love what you talked about, how, if you want it to be a part of your wealth building strategy, because it has a little bit, it's wealth building, great for growth. There's legacy, there's tax. And so I love how it touches all of those buckets. And I think that's important to note. The government has been awarding those who are in real estate for a long time. And now with the new tax code, it's even stronger than it's been over the last few years here, just with bonus depreciation coming back. And so I think it's just a great time to take advantage of that. And going back to what you talked about, Jason just walked through those different steps to use depreciation to offset active income, capital gains, and there are certain steps that need to be taken. But I mean, when you know the rules and you play by them, it's a great strategy. It's a great strategy, because one thing that you mentioned there that we didn't really cover a lot of is the cash flow piece. There's a cash flow piece as well that's involved with these gas stations, because it's really hard to find cash flow and a strong tax play as well.
In today's market, it really is a single digit cash on cash return of 7 or 8% annually is a very good income and yield in today's market. And so when you have a triple net lease truck stop paying 7 to 8% cash flow annually with an escalator built in to increase over time, along with the meaningful tax benefit. And then a total return, we're guiding to a 15% annual IRR, compounding return. And so that's really, really meaningful. And for me, I just think it opens the door when you lean into real estate as your tax shelter, that you don't have to allocate to qualified plans. So your traditional 401k, traditional IRA, SEP IRAs. I max out my retirement accounts every year, but I use Roth retirement account contributions because I want my wealth growing tax free. And so many, medical professionals are trying to get their tax deduction through their 401k, SEP, and other retirement plans, and all they're doing is compounding this bucket of money over time. That's a future liability, or tax liability, I should say, and tax rates are likely to go up. They can't go down with where our national deficit is. They're going to have to pay ordinary income tax rates. It's the highest tax rate in America.
Yeah.
You can't get a higher tax rate. And so you're taking what could have been a lower tax rate and putting it into a higher. Plus, so just think about it. If you have $3 million that you hope to retire on and the government's going to take 40% plus of it, you really only have 1.8 that remains. Why would you do that when you could have all things growing tax-free in a Roth, where you could have $3 million tax-free at retirement, plus real estate that has meaningful yield and cash flow? Well, now you have two buckets of money that are allowing you to be diversified, paying you tax-free or tax sheltered or tax advantaged yield from it or income, because you can pull now from your Roth account tax-free, and your real estate's cash flow gets the depreciation to offset the cash flow in it. So both of those become very tax advantaged.
Oh, man, this is so good. I think a lot of people listening will probably have questions, which we can answer. So make sure you reach out to us, and I'll share that email at the end. But I just think it's been so good hearing you talk about this, because there are a lot of, high income earners that need to know how to, play the tax game. And this is one strategy that is strong and built in that real estate foundation that they can use.
This, Bronson, we bring in CPAs and tax professionals all the time to talk about the tax efficiency of the investing that we do and how we help, our accredited investors invest more responsibly and keeping the tax incentive and tax efficiency in mind. And I'm blown away how few CPAs know and understand how to utilize real estate as a meaningful tax shelter. And so it's fun. It's actually great to share many examples of how we've helped many different professionals in different walks of life, and W-2 and business income and crypto and whatever it may be. And so with that, I just think make sure you get a second opinion. Not all CPAs will get it, will understand it, will know about it. Even. And so do some research, do some homework. There's some amazing tax benefits utilizing real estate and truck stops. And so it's been fun. It's complementary to our multifamily that we do. And obviously it's, we think, a really good time in the market cycle to be investing in triple net lease truck stops.
Yeah, I love that.
Tax-free is the way to be.
Yeah, it's true. It's a different way to play the game.
Yeah.
Not everyone thinks that way in America. So appreciate you jumping on, Jason.
Thanks, Bronson.
Yeah, thanks for hopping on. And if you have questions, contact at harrisoninvestmentgroup.com with those questions answered, because it's an amazing strategy.
The tax code could be boring, but saving money and not paying as much in taxes is a lot of fun.
That's what you taught me. That's the way to make money.
It's worth the research. It's worth the work, and we're happy to get on the phone and talk through it with anyone that has questions.
Everybody's situation is different. Everyone's in a unique situation, and I like what you said. I've seen it happen many times. We'd love to jump on the phone with you and just help you figure out what to do. See your cute kids.
Kids, they're running
went
around.
I want them to come in. They can be on the show.
Then you get educated on tax strategy. Get in here.
Start them young.
Listen to the master.
Hey, wait, what was your maxim again that you came up with?
Oh. If someone gives you a steak, you eat it.
That's a good one. I should have that embroidered or something. Make big, like, inspirational posters. And
I'm pretty sure that's something I live by, Bronson. Yeah, that's good.
I know. I've seen it in action.
Hey, it's good. All right. Well, hope you find your dad.
Thanks. Appreciate
Jason, it's
Thank
always
you.
a pleasure.
Appreciate you having me.
Catch you next time. The HIG podcast expresses the views of its participants and may not represent the views of Harris Investment Group. The views discussed are subject to change without notice. The HIG podcast has no duty or obligation to update the information contained herein. It should not be assumed that past investment performance discussed is an indication of future results. Wherever there is the potential for profit, there is also the potential of loss. This is the very nature of investing. The HIG podcast and its affiliates do not provide tax, legal, or accounting advice. The information shared on this podcast should not be construed as an offering, advisory service, or investment advice. Consult your own tax, legal, and accounting advisors before engaging in any transaction. This podcast, including the information contained herein, is the sole property of Harris Investment Group and may not be copied, reproduced, republished, or posted in whole or in part without prior written consent of Harris Investment Group.